Well, whether he's running one of the largest gold companies in the world or motorbiking across Africa, can always count on Mark Bristow to tell it like it is. Thank you so much for joining us, CEO of Randgold, here on the sidelines of the BMO Metals and Mining Conference. Mark, I always love running into you. Thank you so much for being on the show.
Pleasure, absolute pleasure.
What's your sentiment here so far of the show? Is the mining industry in a healthier state than 1 year ago when we last spoke?
Yeah, I think the mining industry is a lot healthier today than it was back this time last year, and because the gold price is a lot better, and we were looking at bankruptcy and survival, cutting back, discipline.
A lot of ugly things
last year, and then we had this big charge at the middle of last year up to above 1,300, and I get the feeling that everyone's forgotten about those sort of promises about being disciplined and focused and creating value.
Sometimes when we get ahead of ourselves, we tend to get a little sloppy, right? So we have to...
Yeah, I think what we've seen is everyone's talking about the performance in 2016, but that's really off a very low base. And we've lost sight of that promise we made to everyone about delivering long-term value for our stakeholders.
But Randgold doesn't seem like they're losing sleep over the price of gold.
No. And if you go back last year, this time when we had a conversation, everyone was a bit anxious about where they were going and how they would manage their business, and we said, look, we've got a long-term strategy. We make money at $1,000 gold price. We'd actually prefer if it stayed down here for a little longer, clean up some of the assets, like you heard Ivan from Glencore saying, we need discipline. We need to stop producing commodities at a cost higher than what you can sell it for. And then we'll all be in a better shape. And I think we needed that. Unfortunately, that moment's passed.
A lot of analysts I've spoken to recently have said that they actually look at Randgold's stock price as an indicator for the market and for the sector. They've pointed to your share price topping out and correcting 2 months before everyone else last summer. So do you feel your company is a leading indicator for the sector, or was there another reason for the early selling?
No, I think last year was a very challenging year for Randgold Resources. We had a couple of operational issues in the beginning part of the year. We had to really work hard to fix them, which we did, which I think took people by surprise. But I think the difference in Randgold is we've always been reasonably correlable with the gold price. But every now and then people look at us and feel that we're too expensive. But because we stand apart from the rest of the industry. But and I think our share price is dampened both ways, because I always say our shareholders are owners. They're long-term investors. They don't speculate on a quarterly basis. They're very comfortable where they are in Randgold Resources, whereas a lot of the rest of the industry works on a quarteritis. Everything's what's the next news and what's going to happen, and there are very few companies that really do perform as a long-term counter in this industry. And I guess the other one that's comparative to Randgold is Agnico Eagle. And it's interesting, we both high-quality stocks, not the biggest in the world, but have been able to deliver shareholder value for a very long time.
Can you share with our audience the criteria you look for when you're looking to buy out a junior or another company? Is it proximity to an existing site, or what are you looking at?
So we say, we start with the premise that quality overrides everything else. So we won't look at anything under 3 million ounces. We want to make a 20% return at a long-term gold price of $1,000. That's always been our mantra. We've always used that filter. It makes, so we don't have a long line of opportunities when you use that sort of filter. But what we do have learnt over the last 21 years is when you find one, take it, because it's going to work.
Finally, Mark, any projections for the price of gold?
Yeah, I think, as I said a while back, I think we're going to have a little bit of a bumpy ride for the next quarter, maybe 3. But somewhere between 1 and 3 quarters, as everyone gets their head around, the new administration in the US and the Fed, and whether or not it's going to raise interest rates. It will, I believe. But in the medium to long term, I don't think in my 20 years, I've never seen the sort of stars so aligned for a better gold price. The globe, this whole populist movement across the world, the sort of challenging of the recent sort of globalization vision and the sort of inward-looking nations suddenly, and some fairly heavyweights that are leading some of the bigger economies, who are very sort of unbending in their ways. I think the globe is the global economy is in a really tough place.
You mentioned global economy, but what about lack of exploration, new projects coming on the scene? Well, how much of a percentage
exactly. does that is the driver, and you've seen it. Just gold won't go down because the demand is there. Then you add to it the declining production, and this industry, as I said last year, to change that, you got to find more than 80 million ounces at above the reserve grade of the industry today. That's an almost impossible task. And so, with a shrinking supplier side of the equation and a burgeoning demand, things are good for gold.
Mark Bristow, continued success.
Thank you.
I'll see you on a motorbike trip somewhere across Africa. Thank you so much. All right. And thanks for watching our coverage here from the BMO Metals and Mining Conference.